Hi guys, welcome to this week's video. I hope you guys are enjoying your weekend. Thank you for all the messages that I've been receiving from you guys, how you've been liking these videos and how some of the charts have really helped you. So I really appreciate it. Please continue to like, subscribe, and ask your questions. Feel free to put them in the comments below. If you like to see anything else, I'll be more than happy to add it. Again, thank you so much for all those lovely messages. I really appreciate it. All right, let's get into it and see what happened and what we have coming up and what I'm going to be watching. Again, please remember, these are just my thoughts. I'm not giving you any financial advice. Just want to make that clear. That's something that I'm watching on the charts or what I'm seeing and just sharing my thoughts with you guys. Again, please continue to like and subscribe our videos. Let's get into it, what we have coming up. All right, we do have a pretty interesting week ahead of us again, and a lot happened last week as well. Clearly, the CPI report that we got, let's see, right here. Month over month and year over year did came a little bit lower than what I had expected it. Again, those were my thoughts, and I don't think so anything changes even with the CPI report coming down. Inflation is still there. I think, the real GDP growth can be well below the trend for this year and next year. So, and that inflation Fed wants to bring it to 2%. I don't think so that's going to come down that really quickly. So yes, we did see this report come a little bit lower than what expected, in which you saw the market kind of shot up. This is not what the Fed's is looking to do. They need to tighten the financial conditions for it to bring the inflation down. So this is going completely against what Fed is looking for it, even though the CPI inflation data came below than what was expected, which is in a sign. It is good that inflation is coming down, but it's not coming down where they need it to be for them to stop, increasing the interest rates or being a little elusive with their tightening of this financial conditions. However, this might set up as that they don't need to increase 75-point basis in December, that we will see the 50-point basis increase in December. So basically, that's what my take is, how Feds would read this from it. So what we do have this week is pretty important PPI numbers coming out on Tuesday. And then we have, I believe, like almost 20 Feds members talking this week as well. So it's going to be pretty volatile. So just keep that in mind. And then we have the initial jobs claims number, retail sales numbers coming in. And the other thing is we also have the home sales numbers data report is going to be coming out as well. I think 10 Fed members are expected to speak this week. And then we have earnings, and this time we have the retail earnings. So I don't know about you guys, where when you go to your local stores, how many, early Black Friday sales that you are seeing, or how much discounts that you are watching that these retailers are putting it on. This isn't due to because they're trying to give you a discount. This is due to because of they're trying to get rid of their inventory. They're sitting on quite a bit of excessive inventory right now. So that's what is happening. So the ones that I am going to be paying close attention to is Home Depot, Walmart, I believe Lowe's, Target, and TJX. So all of these retail, earnings that you definitely want to watch and see what their reports are going to be saying. What are they going to be giving you the guidance for the end of the year? So all of these things are going to set the tone again for how we see the world move next year as well. So do pay attention to these earnings, but those ones I am going to be watching more closely and trying to read their reports and see what are they telling their investors, how they're going to continue with this. So that's what I'm going to be watching on the earnings side of it. You do have Kohl's and Macy's, but the main ones that you want to pay attention to is the Home Depot, Walmart, Target, Lowe's, TJ Maxx, and Costco. Those are the ones that you want to pay attention to. I believe NVIDIA is this week too. Yes, NVIDIA is also on Wednesday. So NVIDIA has been running quite a bit. So watch this one, how it impacts on the chart. I do have this one coming close to a supply, which I'll go over it, and should be pulling back nicely. But again, our earnings are a coin flip. Always remember that. It could, we've seen on good earnings, companies dump. We've seen on bad earnings, companies take off. So do pay attention to that as well. The other thing is the Treasury General is planning to increase their cash holdings. When that happens, you will see, a reduce in reserve balances, and then that will give you your reverse repo will start to go up. Anytime the Fed's reserve balance starts to come down, you will see the increase in reserve repos. The other thing I also notice is that tends to be the last 2 weeks of it. So if you look at the end of the last week or the last couple days, you'll see the reserve repos are always going higher. So this is the September. Just even visually with your eyes, you can see the bars are higher. We are coming up to the middle of the week, and we want to see how the money or the liquidity that is in the market can start to leave. And then the other, I was going through the SPX chart that I will share with you guys. I did make note on it. Is since Feds have been started to talk about it, since how this whole, the interest rates going up and the financial tightening, them taking, trying to, clean up their balance sheets and how it has impacted. As I've said it before, when the new money comes in at the beginning of the month, we do see that the market has some sort of a bounce. We see in a positive move in the stock market. That tend to last for a couple of days to a week. And what I noticed was on the 15th or whatever the 15th or the 16th comes in a week of that month, we have that weekly candle is pretty red, except for one month that was not red. So I'll go into that chart in a minute and show you guys what I mean by that. It seems like, when you receive a check from a government at the beginning of the month, you pay all your bills, you spend your money, and by the mid of it, you really are not left with nothing. Seems like Fed is doing exactly the same thing. They're spending all their money. By the 15th, for that week, they're literally done with it. And that's when we start to see all these drops, or that week, particularly for the next week and a half, tends to be pretty red. And we are coming to a point, if we look at the charts, and with this week being also the VIX expirations, the monthly, which is going to be this Wednesday, and you have your options monthly expirations this Friday as well. Well, a lot of volatility. So make sure that you have your risk management is on point, that you are not playing with a large size, keep it slow, take your profits. I cannot stress this enough, taking 2%, 5%, 10%, 15%, not every single one is going to be a home run. Please, please, please stop letting your green trades go into a red. Always remember, if you were to put $100 in a bank overnight, you're not even getting $10 the next day. So if you are in a trade and within literally 2 minutes or 2 seconds that you are getting 5% or, even 2%, take that. Green is green. A lot of the time I keep repeating or telling the group as well, if I were to hold all my, 50, 60, 100 contracts that I take, I would be also down that much if I'm not taking money quickly. There's no limit to greed either, right? I could sit back and say, oh my God, I wish I have held all my 60 contracts. I would be up this much. But I've also seen so many times the trade going into red. So most of my money, I make it is on my runners. And the best way to do is, let's say you took a profit at 5%, 10% on your runners, put a stop loss at break even. You're not giving anything to the market if you didn't make anything. You're getting your money back, right? But if it is going in the direction that it needs to go in, those runners would pay you the 50%, 100%, and it's risk-free that way. So try using that. And also another thing is, keep in mind, let's say I took a position in the full position, I cashed out at 10%. The next one, my stop loss is 5%, because that way my account will stay in green for always. If I'm taking 10%, but my stop loss is 30%, I'm not going to be in green. I'm going to be giving more if my stop loss is hitting and I'm only taking 10% my originals. So always keep that in mind. Remember, where did you take your profits? Was it 30%? For the next trade, your stop loss needs to be 15%. So all those little things can really help you keep your account in green. All right, back to the market. So we should start to see these reserve repos starting to go up, and we'll look at the chart as well, and I'll show you guys what I'm talking about when I'm looking at the SPX charts. There's no reason, a good reason, that we can say, oh, we're out of the bear market and we're in bull market, we're gonna go touch the 5,000. If you look at it, how many layoffs are happening in every department and every kind of market right now, in whether it's tech or we've heard even from the retail side of it, so many of these companies are putting freezing hires or hire freezing, whatever the word is, and or doing massive layoffs, and then mortgage demand has been the lowest. It's just the things are not looking good for us to be celebrating that these little rallies. It's like, enjoy while it lasts. I would say scalp it, day trade it. But if you look at the longer term view of it, we're at a point where you need to be pulling up charts monthly, 2 months, 3 months. Those are the charts you need to be looking, not the 4-hour or the daily charts. So we'll see how our PPI data comes in. We'll see how the retail sales and home sales come in. And then let's see what these Feds has to say. And, we're already watching on the crypto side how things are crumbling with this FTX, all these issues that are coming up. So again, all I can say is nothing to be too excited about to say that we're out of the woods just because CPI came in a little bit less than what they had expected about it. All right, so let's look at our charts. So this is SPX. This is weekly chart. And I did make my arrows on it. This is basically starting going back to kind of April. So the second week, anytime you have the 15th, the date 15th coming in, that week's candle is ending up in red. So we got the red there, we got red here, red here, red here, and then you got red here. And this is where we are going to be printing this week's candle. And I'm pretty certain that it is going to be a nice big red candle as well. If nothing else, I feel like on the weekly, we'll go touch the 200 moving average. And on the daily, I would say this next day or two, we do still, I'm not saying that we're going to continue, we're going to just drop. No, I think there is still room for us to go test the 4,070, 4,080 area on the SPX. So definitely, and that gives you the 200 daily moving average right here. And you're getting to test your supply as well. And then the other thing, if you notice, is if we go down to our 4-hour chart, this is right here is not just a supply, this is also the liquidity that we are going to be testing as well. So if I go down to the US 500 chart, you can see it more clearly. We are actually literally somewhat followed the plan that I had drawn last week. We are in a touching about the 62% fib rates on the US 500. I still think this might have a room to go test this supply and be able to test this, take whatever the, the orders or the money that was left in this area. This is where it should come back and retest and then clear out whatever the liquidity is left in here. So that's based on your US 500. I do use this chart more along with the futures to see what we are doing to get my levels for SPX. And then we'll look at SPY as well. As you can see, we did take out the liquidity right here, but I am looking for this to continue here. And this happened to also be your 200 moving average as well. So if we test here and reject, which could happen technically in pre-market Tuesday morning, and then we get the PPI numbers, and then we start. That's just my thought is, anything is possible. This market is, who knew that SPY could see a $20 days, which we've been seeing it. So this is your SPY daily chart. Again, 407, 408 is on the table. That also comes to be your 200 on the day as well, 200 moving average. And we test this area back again and then reject. If it has a hard time breaking the 400, 400 is also the highest gamma level as well. And 4,000 for SPX, which SPX already touched it on Friday, but for this November 18th expirations, the biggest gamma level for SPX is 4,000 and SPY is 400, and for QQ it's 280. So keep those levels in mind. If we start to see selling touch that and things start to sell off, that basically means those options contracts that were open, people are starting to take their profits because they are in the money now. So that's what we have on SPY. Let's just quickly look at the weekly chart as well. There you go. And it's coming up to the same levels, and it has this trend line that it can test very nicely as well. So I would definitely be watching the weekly along with the daily to see what's happening. And then, if it does, I would say on the week, again, we have the room to come back and touch the 200 moving average. The other thing I do wanted to show you guys was you can see where the the S&P 500 stocks for the 50-day moving average, if they are above or below. So look at this line. Every time we have come close to the 50-day, we have, this is also happened to be a supply zone for all the 500 stocks. And this basically tells you 50-day moving average, where it is. It's coming up to be right here. And every time we have come up in this zone, it's rejected nicely and pulls back. So this also lines up with your other charts, the SPX, SPY, and US 500. We come in, you can use this ticker to see what the average of the 500 stocks are, if they're above or below the 50-day moving average. So you can also do it with your 50-day moving average indicator, but this basically tells you about the all of the 500 stocks, what average of it if they are above, but currently most of the average rejects and we pull back from it. All right, so that's what we have that you want to look into it and watch. Now I'm gonna go through some of the tickers that actually before I do that, let me show you guys. So you can pull up Snap and while you guys look at the chart, I'm gonna see if I can pull up. I forgot to have the flow slides up here. So it's opening up. I'll go over the SPY flow, and for the other stuff that I pulled up the flow so you guys can look at it where we are for this week. All right, so there we go for the SPY. We do have our highest dark pool prints are in the four. You got first the 401.60, 410, and then 411.35. This 410 area again lines up where our 200 daily moving average is, lines up with your supply and liquidity, and any of these small run-ups to the 411.35 would be basically a bull trap. So just keep that in mind. These levels do play out. This is big money, big prints. Don't fight against it. And as you can see, the open interest on SPY as well, we're looking at that 400 being the highest gamma level and highest open interest as well. These are, I would say, way more out of the money. Then this is what you want to pay attention to. And then you got way more on the put side. All right, so I also went into Trading Ticks and took the screenshots of the call and put kind of to show you guys more on the side by side. And if you look at the open interest and volume, puts exceeded out way more than the calls do. So look at the open interest on 375 December contracts. You have 3.995 in premiums, 9.31K in volume, and look at that open interest, almost over 100,000 in open interest on that strike price alone, and nowhere near that you have on the call side of it. All right, so let's look at back to the snapshot that was requested, and I would say nothing much has changed from the last week's analysis. We are coming up to this small supply zone that has coming up on Snap. I think it's going to be hard for Snap to clear this. This was a used monthly what do you want to call is demand area that we are. Once it's used, it's not that as strong as when it's fresh. We did break out of this trend line very nicely. So I would watch if it has a hard time breaking above these levels. I would say more room to the downside, and then test the fresh weekly supply, weekly demand, and then bounce from there. But from right now, when I was looking at it, Trading Tick does not have the most open interest on the put side of it. But if we look at the dark pool prints, you had the highest in 958, and look where the bounce was. What a beautiful bounce and strong candles. Once that dark pool prints start to come in, it bounced very nicely. So anytime market moves, it's the big money that can move it for you. And then if you look at it, the highest open dark pool print is at 1551, which would be an overreach if we are really shooting out and SPY's going to 420. But I would say this 1190 is would be my first, if we are on the calls or if I'm looking to get into the puts, I would say 1190 is where I want to look for it if we are gonna get reject, which also lines up with this $12 starting for your supply, because they are always stop loss hunting. It's like, people don't understand when you're putting your stop losses, don't put it where vast majority of the people are putting, because that's where they're hunting for it. That's how you get, kicked out of it. If your supply zone is here, give yourself a little bit extra room. How many times I've been saved by that? Because I gave myself little few more extra cents. Okay. All right, so here we go, and then you can see the open interest on it on Snap is, I would say the highest is again the $11 or the 1050 strike price. We're coming close to it, and then you do have a $15 strike price as well. But on the put side, this is kind of overweighing the put side than it is on the call side, and this is from the trade from the from Trading Ticks snapshot for it. But if you look at it, I would say these have been, already expired because it's over. Now we're looking at this Friday's expirations is quite a bit of a call side. But if you look at on the put side, you got way more put side expiry is further out. You're getting March and January strike prices, and look at the open interest on it. And so I would say a little bit more room in Snap left for it to before it pulls back. All right. Next is we have Shopify. Let's look at Shopify. Okay, Shop is right in a supply zone. It probably wants to test and touch the 200 moving average, 45. If it is really breaking and it breaks above the 200 moving average, then I would say you got a little bit more room up to the 52, 54 before it starts to pull back. But I would be watching how it reacts to the 200 moving average. There isn't a trade that you should be taking in between here, neither in a call or a put, unless you're day trading. For a swing, for you to know which way it's going to go, you need to watch how it reacts here. Or it needs to break below, I would say, is 38.70. If it breaks below 38.70, then you have a fresh demand zones to the downside that it would come down to it. So that's what I would watch on Shop. And let's look at their dark blueprints. Look at the bounce. Well, you can see how it broke out once it broke this dark blueprint level. So next dark blueprints are 41.13, which also lines up with your 200 moving average. If you start to see that it's struggling to break above this, I would definitely, that's where you want to look for a put. Open interest still, calls are pretty high. These are, I looked at the expirations as well, pretty out of the money with the time on it. So I don't really pay attention to that is that far out. I'm looking at something a little bit more closer. And I saw $40 strike price and the 50 and 45. Those are pretty, have a nice open interest as well. And then this was Trading Ticks. That's where we are, actually, this one right here. All right, so here you can see the call open interest is still pretty high on for this Friday's expiration, and your puts are more for March. And you can see the open interest and volume on those ones. So if you are thinking of it, $200 rejects, that's where you want to buy. You don't want to buy anything closer because the big money isn't even spending it for December or for January. They're buying it for March. So I would give myself time and buy those puts instead of buying something shorter dates, right? Because for those days, they're actually buying calls here. So definitely pay attention to it. But the one thing that you can notice is you have only first week of December that you're getting $44 strike price. Everything else, you're pretty much coming close to in the money. So these could start to cash out very quickly. All right, so let's look at, I am going to look at a few things that we still have open in for the bot and for the small account challenge to kind of show you guys what I am watching. And then I'm going to give you, we'll look at 3 charts that I think, especially with their earnings coming up, what I am seeing and what I'm watching on those ones. All right, so let's look at Macy's. We have our contracts open and it is right in supply, probably slightly a little bit more room to touch this trend line if we do open green or kind of goes sideways until Tuesday and then pulls back. This is, again, it's struggling to get above the 200 moving average. Every time it goes above, it gets beaten up and pulls back. So, and the other thing you have to remember, our contracts have time on it and they're way out. For the bot people, we're out to 2024. And for the small account challenge, we're out to 2023. So I'm not worried about it. I would only start to worry about it if we start to break above the 24 levels right here. That means we have really changed the trend that we are bullish. I'm not even worried if it breaks above a little bit above this trend line. That's basically, for me, it is stop loss hunting. So I'm still watching. I have my alerts set on it. I am in a positions for these ones, but this is what you want to watch. And if we look at the weekly as well, it is coming up to nice this trend line that it still has a slightly little bit room and touching the top of your supply and then rejecting and coming down. So that's what I have for Macy's, and I'll give you guys also, let's see, here we go. So Macy's dark pool print is 2096. It did break out slightly. We are above from that print, and the next prints are, the biggest next print is 2312. But however, these two had been very strong, where the rejections have been each time pushed down. So, and you do have open interest on the $25 strike price. But as at the same time, if I look at it, puts are still pretty higher than the calls are. And this is from the 30 ticks. You got more open interest and volume on the put side than you have on the call side. And call side, this strike price is already in the money for 11.18. Then this probably is you're gonna see the open interest start to decrease this week once they start cashing it out, and you'll see how the puts should be starting to move higher as well. So that's what we have on the Macy's, and that's what we are watching. And the next one is T-Mobile. This is another position that we have. This is the weekly chart. We're right at the resistance right now, is what I have. Does it have a more room? Yes, it has a little bit more room that it could come and test this area. But again, remember, we have plenty of time on our contracts. It is at the bottom of the gap that it's testing. There's a gap right here that it could go and fill. For me, the stop loss for this thing would be hitting is if we get above 2120. If it gets into this supply zone area, is I would say the trend is starting to change. Then that's what I'm watching. But for right now, it could reject right here and continue to pull back, or it wants to fill this gap and then get rejected. But I think this is running out of steam as well. And if we look at our open interest and dark pool prints and 1938, and it hasn't been able to cross this. So that tells me this is a bearish. Our current price is at 1904. And then the highest next print is 2129. If we are breaking out, that's what you want to watch, is any of these levels in between start to break out, then you know that this is the next one is coming up. If you're not in a position and you are watching this one, these are the levels I would watch to take a position. If it breaks out, then you know what the next levels are for it to continue to go up. But if it's rejecting and having hard time getting above 1938, I would look for a time on a put and look for a more on the downside of it. And majority of the calls are in the money. You can see the strike price is the 16, the 20, the 19, 18. And then you have your puts for December and for 2024. You got a nice open interest on those ones as well. All right, so next one I want to look at is AAL, and this is another position we have open. Okay, we are very close to the 200 moving average and a supply area. This would be very nice rejection, and this would be the second test of the supply right here. The fresh test of the supply right here. And once it rejects, if you're not in it, I would definitely look for a position for these ones. And I think that 200 moving average is a pretty strong resistance itself, let alone the supply zones coming up as well. So that's what I would definitely watch on it. And just back to the daily here, if it does, watch to see how it gets back into this channel right here. And I would say the end for AAL, I am still looking for somewhere in the 1120, 1134 area for AAL, American Airlines. All right. I know I didn't, someone asked for a SOFI. So I'm just gonna pull up. I don't have the, I didn't have their dark pool prints pulled up, so I'll put it in the group, but I'll just share my chart what I have. It has a supply coming up. If it is not breaking above $7 or breaking above the 200 moving average, I bet you it is coming back to the $5 to retest this demand zone. But it definitely needs to cross above, I would say, the 657 area or the 200 moving average, and then continue. If any of these rejections happen in this supply area, I would look for a put to the downside of it. This is your weekly as well. Still, it is a bullish candle, but I think it's, especially with the whole thing, looking at the SPX and SPY, what happens the second week, unless this time it's going to be different, that we're going to continue to run. SOFI will continue to move up, but I would say more room to the downside once it rejects in any of those areas, either right into the supply rejection. As you can see, every time we've tested or touched, we've come down very nicely. So I would definitely watch to see how it breaks above 657 or breaks above the 200 moving average. That's what I have on SOFI. And then was requested was PayPal. Was another one. Okay, so I had drawn last time when we went over two paths. I said either it goes up or it comes down. So it looks like we rejected that week right on the supply zone. We came down right into the demand zone that I had printed and bounced. Look at that bounce from the demand beautifully. And then the other thing is, you can watch any of the orange lines are usually my dark pool print lines. So once it broke that 81.76, it actually gapped up very nicely and right here. And we are coming up to a trend line. This is the trend line that it is having a hard time breaking above. And it is right in between the dark pool print of 89.79. It did close above. However, you do have this supply that it's having hard time breaking above. And you have the 200 moving average coming up. So either of these rejections, anywhere in between here, the $93 to $89 is a beautiful for a put to ride it back down. I think I did pull up there. No, I did not pull up there. So I'll drop the dark blueprints into the chat. I did not pull it up. Okay. So that's what I have on PayPal. The next one is DE. We do have this one open as well from the bot alerts. Actually, this one I am a little bit concerned because we don't have as much time. Then I thought it needs to drop, I would say, almost 40-50 bucks for us to come out in the green. So this one I am going to watch if I can get out with a little bit less where I am right now from down, maybe even at break, even if I can. So very ugly candle on the daily. Did go, in that area. However, they do have earnings coming up, and they tend to, so far, have been doing pretty well on some of their earnings. So I would be concerned with just because of their earnings, unless the rest of the market is pulling and they also pull back. We do have a demand zone where it could come and then bounce again. So that's what I'm watching closely, this one, to be honest, because I do have a nice position in it and I really don't want to lose it. And I have not averaged down or anything. If I do, I usually have a plan up front where I say I'm starting a position and then I add more to it. But because for this one, I did not have, that was not a part of the plan. So I don't like adding into it. But I do like the candle that it ended the day with. That's a pretty bearish candle. So we should see the pullback down to it and then be able to get out with as minimum loss as possible. So that's what I have. And then I did pull up their dark blueprints. Currently price is at 406 and we have a strong dark blueprint at 430 and 439. Again, that would mean I'm going to be losing quite a bit on my puts. So I'm gonna be watching very closely to see where I can cut or where I can come out with a break even. Did pull up their OI for puts and calls. These calls should be coming out pretty soon, but this 440 strike price, open interest 373, volume 115 is a little bit concerning because it's out to January. Feels like they know something about what's about to come out on earnings, and that's why they have it. But again, both of the puts have quite a bit of time on, and we do not have this kind of a time for 2024 and 2025. So this one I'm a little bit concerned to see how it plays out. So I'm still holding, but I will definitely let you guys know how it pans out. All right. Okay, let's look at now what I wanted to talk about is the ones for this week that I want you guys to watch is lows. So this is my chart for the 1 day. Look at that beautiful rejection. It's about to come up. Every time it touches this trend line, it pulls back. So I did draw this for you to, if you were to get into a put in right here is your stop loss. Risk to reward is going to be beautiful on this one. And this areas are where you want to take profit. Call me crazy. Final, I think it has a room to come between 148 and 130 on lows once we are all done. And these are the 2 dates I'm predicting that by this time we should be there between March 8th and March 2nd to February 27th. So any of these 2 days, we should see lows making new lows, lows making new lows. So this trend line definitely follow to see, which means it still has a little bit more room to the upside. So if it does and then pulls back, that's going to be very nice. So if I look at I look at some weird time frames, but this is going to be beautiful. Even the 2-day chart, look at that triangle, how it is forming, and it's been a beautiful every time it pulls back and bounces. So this pullback down to right here, about 180 area is going to be my take profit zone as well. So, and it has a demand zone coming down here as well. Let's look at the 2-day was pretty nice as well. And look at the 2-day chart as well. You got a very, very nice setup on the 2-day. And again, a little bit more room to the upside. I would start making my put position anywhere between 210 and 220 if we are really pushing through. So that's what I am watching on lows. Did I pull up their dark blueprints? Yes. All right, here we go. Current price is at 209. And as you can see, 209.11, 209.99 was 122 million, and you do have 234.156. So if it has a hard time breaking above 210, 211, you know that it's gonna pull back. So definitely watch this one. And the interesting part was look at the open interest on the put side and then versus the call side. How heavy it is on the put and how little is on the call of it. So that's what you want to watch on the lows. HD, pretty similar setup. As you can see, lows and HD. We are on the 2-day chart right here. But if I take you to daily, this one is actually touching the top of the trend line. And if it is having a hard time breaking above this trend line, or if it breaks and retest of this supply and rejects, beautiful entry to write it down into the weekly demand zone on Home Depot as well. And I think their call to put ratio is pretty similar to what Lowe's has. All right, so current price 315.23. Your dark blueprint is 315.31, and then the next is 329. So give yourself plus or minus $2 with these dark blueprints. So let's say Home Depot struggles to get above 316, 317, and it's breaking below. You can bet it's coming down to probably the 289 area. And this is your open interest for calls and puts. And again, you can see what an open interest on the put side and what little you got on the call side. All right, this video is going to be long, but I really wanted to share all of these. Costco right at the 200 moving average. What a beautiful diamond on the weekly. Look at that. And you are crossing above the 50% fib levels as well. I would say anywhere between 520 to 525, this 527 area rejection. Beautiful entry for a put, because Costco still has quite a bit of call side open interest than on the put side. But if you look at it, it is breaking above the 200 moving average. So I wouldn't be fighting the put yet. I would wait to see how it reacts in the 520 and 527 area and then pulls back. This path, I think I posted it as on the second video. So far, it's been really playing out very nicely. So let's look at their open interest. And so we have price currently at 515. Biggest level is 256 million at 546. But your next closer to the money dot blueprint is 516.30 or 517.32 and 522.95. And looking at the chart, it does have a room to go up to these dot blueprint levels. And if the interesting part is, look how where Home Depot and Lowe's has more on the put side, where Costco has more room to the upside on the chart, and you have more open interest on the calls versus on the put side of it. So I think I've covered pretty much all the tickers that I wanted to go over. NVIDIA, let's just quickly look at NVIDIA and Apple. Those are the two ones we will look. So filled the gap, beautiful break out of the falling wedge. I gave you guys these levels. Any bounces from here is going to be nice, which it did. It is right at a resistance area, but it closed above. So I would look for what the next demand and 200 moving average is going to be on NVIDIA. Apple, very nice right here is, could it go test the 200 moving average? Possible, I would say. 152 is what I am watching, 152.38. If it doesn't get above 152.38, I am going to be adding into my 2024 puts more. I currently have for Apple those puts. I will probably add more and hold on to it, because my final take on Apple, where we're going to end up, I know, call me crazy, but you are looking at the 81.54. Any of those areas are coming. That crash is gonna be, it's gonna happen. I don't know what it's gonna set off, but definitely that setup is gonna happen pretty soon. Tesla, nice bounce. Look at that. We draw this last week. Didn't really go touch the supply, but that pulled back once it did not cross the supply zone from 237. What a beautiful put. Every support and resistance played out a key role. And now we're breaking above this dark blueprint, which is 183.73. If we do break 195 and we are in the 203, 205 area, I will start my put positions on this one if it does move higher to it. Otherwise, I won't be jumping in anytime soon. I want to see a little bit more bounce before I take my puts on it. And this thing also has some gaps on the downside as well. That's Tesla, and I think this will. We'll just look at it quickly. Microsoft coming up right in the supply zone as well. So if it doesn't break above 250, you do have a 254 as a resistance. Beautiful looking chart for a put as well. And also let's look at VIX. As we can see, this is the daily chart. We broke from this trend line very nicely. And we do have a strong resistance, support coming up, which is 2173. And then we also have this small gap on the VIX that, could get filled this week, which it's not that big of a gap. But for VIX, it's still pretty significant that if it does decide to come down. So in between 2128 to 2164, this is the gap. If it gets filled up, then we do have, a small area where it could bounce from it. However, 1997 has been also a very strong support for it. This also lines up with if, SPX and SPY was going to have that move back up to 4,080 or to 407, 406 area, 408 on the SPY. This will line up pretty much with VIX as well. And the other thing is, as we've been watching, is dollar has been moving with the market quite nicely as well. So right here, we have already broken one of the support at 107.88. I do have a demand coming up on the daily. So if we do see that pullback and it holds the 200 moving average on shoot up from here, this will really set up for, the market to pull back. However, this also, if it's pulling back, gives the room for market to move higher as well. So keep that in mind. And the other indicators that we've been watching is the TLT. And as we can see, market's been moving higher and TLT also gapped up because of the bonds giving you this gap now to move higher. And whenever we are pulling back now, this thing has a nice gap fill on the downside, and that means market should pull back. However, if it continues and decides to test this supply, this again lines up everything with that we've been seeing on SPX and SPY. And let's look at quickly at TNX as well. And on the TNX, as you can see, we pulled back. And as I have talked about in other videos, how if dollar goes up, our market comes down, dollar comes down, market goes up. Same with if TNX is coming down, market is going up. If TLT is going up, market is going up as well. So keep that in mind. And with TNX, we have the demand coming up. And on TLT, we have the supply coming up on the upside. So that's it. That's it for me for this week. Please do keep. We can't rely on just one thing. We have to look at multiple things to come up with our conclusions, what's happening, because a lot of the time the market is being moved by the news instead of by, the technicals that we're seeing on the charts. But still, you want to make sure that you are checking all your, dots and making sure everything lines up before you jump into any bigger positions. Well, all right, that is it for me today. And I hope you guys like and enjoy these videos. Again, any questions, feel free to put them in the comment below. And please do like and subscribe. Thank you. Have a good week.